It's a vital part of getting a credit card, loan, mortgage and much more. Martin Lewis is joining us with everything you need to know about your credit score.
But just before we start, you've got a special Valentine's-themed show. I know you don't like Valentine's Day.
No, look, Valentine's is a wonderful celebration for card shops, flower shops and chocolate sellers. It's not that romantic. Most people would rather get rid of it when I do polling on it.
Yeah.
But
when I saw your wife last week after you made this, she said, I look forward to Martin spoiling me on Valentine's Day every year.
Absolutely not.
I can't believe
She's tighter than I am.
Not possible.
You're not going to happen. No, look, so it's actually a very important show. I'm going to be going through the 9 financial benefits of marriage. And they're often hidden. People don't realise them. When I've talked about it, I've never put it together before, but talked about bits of it. In fact, you've got someone coming on the show who got married after hearing me talking about it. Right. They'd been together years, they weren't married, and they went, wow, we didn't realise they're now getting married. And then, because it's Valentine's Day, I've also got divorce specialists coming on the show. We're going to be talking the finances of marriage. So anyone who's in a couple, you need to watch those benefits that you're missing out of. It can be worth hundreds of thousands of pounds for some people. And then we'll also be talking about how you try and take some of the pain out of divorce. And that's on Thursday night at 8 o'clock. My show's normally on a Tuesday.
Yes.
Thursday this week.
Thursday this week.
Fantastic, thank you.
Let's talk about what we're doing here today, which is about credit rating or credit scores. We get confused, don't we? We all assume we need a credit score.
Yeah, in the States, you have them.
You do in the States,
yes.
You don't in the UK.
Yes.
So what I mean by that is when you apply for any form of credit product, you will be credit scored by that lender, but each lender scores you differently based on its own individual wish list of what is a profitable customer.
Right.
You do not have a single number that represents your credit score or your credit rating. There's no such thing as a credit blacklist. Now, of course, if you're a bad risk, many firms will reject you. You'll feel like there's a blacklist, but there isn't a blacklist. Now, I know there'll be people out there going, what are you talking about? I've paid for my credit score. I know what my credit score is. What happens is the 3 credit reference agencies, Equifax, Experian and TransUnion, years ago, some clever guy there or clever woman there went, you know what? We're only making money from companies. We could sell consumers their information in a much fancier format and get them to pay for it. And that's what happened. So your credit score that you get from those agencies is useful as a rough indication of how a typical lender may see you. But it doesn't actually feed in full to how lenders credit score. They do their own modelling. So what I would say, I get loads of people who say my credit score's just dropped by 3 points from 972 to 969.
Yeah, should you be worried?
And I'm like, forget it. It's a loose indication. Big move, you need to look at it. You know, if it drops from 920 to 630, there's clearly a major issue going on. If it drops from 920 to 910, it's irrelevant. Don't sweat the small credit score moves. You don't have to get your credit score. That's not crucial. It's just a loose indication of how a typical lender may see you.
So just a quick question on if you pay to have somebody give you a credit score, is that worth it?
Well, you can get a lot of them for free now if you do it in the right way, if you go through. And I think it is a useful indication as a, you know, if you wanted to stop, go, how am I doing? Oh, you're doing quite well. You're not doing so well. That's fine. But don't look at it in the fine detail, because the fine detail, you know, I could go to, for example, you cancel a credit card. Some lenders will see that as positive because you've less available credit. Some lenders will see that as negative as they like signs of longevity. There isn't a uniformity in how they look at this.
Right.
OK.
What about if you've got something big coming up and you're thinking to yourself, I want to check it, I want to check for any
What's
errors?
really important is your credit file, also known as your credit report.
Okay.
Now, I would every year be checking at least one of the 3 agencies, checking my credit file.
Once a year, Martin?
Once a year.
OK.
Or before any major application. If I'm doing a mortgage, I'd check all 3 of my credit files.
OK.
And what I mean by check is I would like you to go through line by line. And this is the type of error I'm talking about could catch you that you wouldn't think. I know someone who had an old mobile phone that was still technically active. They weren't using it, was registered to their old address. They didn't get a mortgage because of that inconsistency triggered a problem. You make sure everything is correct. Your credit file contains details of the electoral roll information, county court judgments, every product that you've got, whether you're paying them off on time. You need to make sure they're correct, and if they're not correct, you need to contact the credit reference agency.
So where do you find that information, Martin?
Well, there are 3 credit reference agencies, Equifax, Experian and TransUnion.
Which
and you
is
can
the
get
best?
there. They all lenders use different ones.
OK.
So it depends which one the lender is using to the product that you're getting, which is why. Now, if there's a major error, they communicate with each other. So I just check one, generally, just to see what's roughly on them. But before a mortgage, I'd check all 3.
OK.
And you'll get in touch with them. As to where you get them, well, you have a free right to look at what's on your credit report. It's quite a cumbersome way. Or there are routes online where you can get it done for free much more easily and see a more souped-up version, but I'm not allowed to mention some of them. So, that's the way we'll go.
If you do have a perfect credit score, doesn't necessarily mean that you're going to get accepted for whatever you're after.
The biggest single thing that impacts acceptance is not on your credit file.
What is it then?
Your income.
Oh, OK.
Which makes total sense, doesn't it?
Makes sense.
And what people don't talk about is you have an affordability score. So they'll both credit score you. So let's take an example. This is better with a loan.
Yeah.
So you two both have a good credit history. It's always gone pretty well. You're a couple. I've just made you a couple. There you go. And everything's pretty good. You've always paid off on time. Now, you're applying for a £1,000 loan. You've got income of £15,000 between the two of you. There's a chance you'll get it. You've got a good credit history, but the income is only just enough to get a £1,000 loan.
Right.
You apply for a £10,000 loan, they're going to say no. You've got exactly the same credit score.
Sure.
Right?
I
But
see.
the affordability score is what's knocking you out. So people get in touch with me and they say, I've got a perfect credit score, I've been rejected. Well, you may have failed the affordability score. You also may have not been profitable. They may be trying to get you to get a current account because they want to sell you a mortgage. You're not suitable for a mortgage, you're not profitable, they've rejected you. Not because you're a bad risk, but because credit scoring, it's what I said at the beginning, is about their own wish list of what is a profitable customer.
So if those wish lists change compared to each different company, what are the ones that always cross over, that they'll always look for? There must be like some core...
Oh, there's loads of things that, I mean, look, good risk is always important. That
Right.
I always talk about the best way I do credit scoring. I think we've done this before, and I'll say to you again, don't be your lovely, generous self. Okay. Be hard-nosed here. We're in a pub, I come up to you, and I've forgotten my wallet, I've done it 20 times before. I say, lend me 20 quid and I'll buy you a pint tomorrow. I've done it 20 times before. I have always repaid you on time the next day without prompting.
Oh, okay.
Would you lend me the 20 quid?
Yes.
Come in, someone else comes in. This time they say the same thing. They've forgotten their wallet 20 times before. They never repay without you chasing them. It's hard to get the money back. Would you lend it to them?
No.
No. So first is a good credit history. It's about predicting your behaviour based on your past. The second is a poor credit history. The third case study, someone you've never met walks in, they seem perfectly nice, they ask you to lend them 20 quid. Would you lend it them? You have no data on them.
Right.
So there's three things. Now,
Go on.
when they're actually looking at you, I've got a graphic here. This is complicated, but this is what they're really looking at. There are lots of other factors, but this is what we're looking at. If
Do you
can
have a
bring up
Swiss
the
roll?
trigger. No, there's no Swiss roll. That's my pensions. Here we go. You've got your debt ratio, your credit utilisation, and your disposable income.
Okay.
This is how they most of them look at it. Debt ratio first. How much unsecured debt, that's credit cards and loans, not mortgages, do you have as a percentage of your annual income? So you've got £10,000 unsecured debt and you earn £40,000, that's 25%.
Yeah.
Below 20% is good. Over 60% is very bad. Lower is better, although actually if you only have 1% because you don't have much data, that can start to be a problem.
Right,
So you
yeah,
want to
yeah.
be around 5 to 10% debt ratio. Next is credit utilisation. How much of your available credit do you use? You've got a £5,000 credit limit. On your credit card, you've got £1,000 of credit on it. That's a 20% utilisation.
Yeah.
Again, lower is better. This is only a problem if you've got high debt ratio. So you've got lots of debt and a high debt ratio,
Yes.
it's bad. Little debt and lots of debt and a high credit utilisation is bad. Little debt and high credit utilisation, not that big an issue. How do you improve this one? Well, you reduce your debt if you can, or look, if you could, you increase your income. How do you improve this one? Well, you reduce your debt or you get more credit card and you don't use it. But it doesn't have that big an impact, but it can have a subtle impact if you've got low debt. And then the third one, crucial, is your disposable income. Remember, income wasn't on your credit file, so it's your application form they're getting that. How much spare cash you have each month after bills and essentials. The higher, the better. Okay. Now, this takes me on to my next point. When you apply for a mortgage, let's keep this up, please. When you apply for a mortgage and they're looking at your disposable income, they are literally looking at your spending.
How you spend.
How you spend,
Right.
they'll want details, they'll want stamp statements, and they'll calculate your disposable income in the affordability score. So if you're applying for a mortgage and you don't have a good disposable income, go frugal in the 3 to 6 month run-up to improve your statement.
Okay.
Yeah, you know what I mean?
Yeah,
Stop
yeah.
spending, cut it
Be
back.
smart.
But with credit cards and loans, they use a statistical model to work out what someone in your position would have as disposable income. So it's not your personal disposable income they're looking at, It's a model of what someone in your situation would have. So going frugal has no impact.
Right, I see.
Right? So you can't do that for the frugality one. Effectively, the only way to improve your disposable income is to have more income.
Yeah.
Right? Now, look, again, I would suggest to people you see this more as art than science.
Right.
Right? Every lender scores you differently. These are very complicated. I haven't mentioned, every application that goes on your credit file, too many in a short space of time can cause you a problem. I haven't mentioned fraud scoring. I haven't mentioned being consistent on your applications. Don't call yourself different job titles. Don't use a different mobile phone. It's more art than science. But generally, managing your money well, never missing a payment, never being late on a payment, and not having too much debt compared to your income are the things that will help you. Missing payments, not paying your debts, those are obviously going to be a problem. Time heals. Bad things go off your file after 6 years. Applications go off your file after 1 year. That's my rough summary, but we got the phone in on it because I know there's so many details people want. But that's just to give you a start.
There'll be lots of questions for you. I'll tell you what is art and science. It's what you do for us. It is 22 years yesterday that you first appeared on This Morning,
isn't it?
Martin Lewis. You haven't changed.
Well, I'm even wearing blue. Look, hold on.
Different.
There you go.
Look at
you really haven't changed. Your hair's a bit darker.
There was more of it then as well. There was more of it then.
22 years, been some journey, eh?
Yeah, it's been yes, I remember. It was a very, very emotional day for me because I'd always said when I did my postgrad in broadcast journalism, I'd always said I wanted to be on This Morning and come and do what I did. It was always the big goal. He was very young. Look at him.
He was.
Handsome as well.
So much hope, so much joy.
And I tried for 2 years and they wouldn't have me on. They said money doesn't work on television. Right?
Little did they know the eyebrow worked on television.
I did a Radio 5 live show just by accident. And the editor of This Morning, I think her child was ill, so she was late to go in, so she had Radio 5 live on. My agent, we contacted so many times, come on. She heard me, and I was having a good day on air, and she called up and said, he's good, can we get him on the show? So I went on the Friday, came on the Friday, did a phone-in, bust the phone lines. The phone lines couldn't cope with the demand once I started answering the questions. And they said, come on every week. And that was 22 years ago. So I'm very grateful to This Morning. It was a real start of my main TV career.
We are very grateful.
The whole nation is grateful, thank goodness. Happy anniversary.
Yes, thanks,
Sticking around for the phone-in as well, because I'm still answering people's questions now, 22 years.
Oh, hello. Thank you for visiting our This Morning YouTube channel. We upload tons of new content every single day. So hit the subscribe button, like all the videos, and don't miss out. We'll see you in the morning.